In its continued efforts aimed at driving growth in the country's tech and startup ecosystem, President Muhammadu Buhari in October 2022 signed into law the Nigerian Startup Act, signed the bill into law 4 months after the federal government took the bull by the horn by swinging into action by inaugurating a 27-man implementation committee saddled with the responsibility of establishing a baseline ecosystem for digital innovation and entrepreneurship across the country. Going by the unprecedented achievements and the significant contributions of the ICT sector to the nation's GDP, which has helped in diversifying the nation's economy, the big question now is, what are the prospects and challenges of this act to the tech ecosystem? And joining me to profile solutions to this via Zoom is the Group Chief Executive Officer, Cowry Assets Management Limited, Mr. Johnson Chukwu. Mr. Chukwu, good afternoon. Thank you so much for your time. It's good to have you on the program.
Good afternoon, Tuli, and thank you for having me.
Yes, well, I'm going to start this way. This bill looks, this act, I beg your pardon, looks like something like the PIA, which is to, of course, improve the proceeds of the oil and gas industry. And now we expect this to help boost our startups and all of that in this country. But first, in your view, what is your take? What are the prospects? What are the positives of the Startup Act?
Well, let me start by speaking a bit about the kind of relationship we just established, that this may be akin to the Petroleum Industry Act. I think this is actually superior to the Petroleum Industry Act because digital economy is the next phase of the human development. It's actually...
Mr. Johnson, please, I beg your pardon. I beg your pardon, please. We need to come back live. We need to take a 1-minute break and we'll be back. Please, I apologize for interjecting, but we have to just go on this break. Thank you. Well, thank you so much for staying with us. Mr. Johnson Chukwu, you are making sense of the Startup Act. Please take it from where you stopped.
Yes, so before the interlude, what I was saying is that the Startup Act is actually superior in all ramifications to the Petroleum Industry Act. The petroleum industry is a dying industry. Granted, for Nigeria, it's still the mainstay of a foreign exchange earning. But in terms of advancement in human knowledge, human technology, human engagement, technology is a next phase of human development. We're talking about the fourth industrial revolution, which is actually the digital age. So with Nigeria coming up with the Startup Act, which kind of codifies the legal and other factors that will drive technological innovation, drive startup business in the country, particularly in those in the digital space, I think we are gradually preparing. We're obviously preparing the ground for Nigeria's transition from an analog economy to a digital economy. And as we know today, the most valuable companies in the world are all digital oriented. And so for me, this act, the Startup Act, is actually multiple times superior to the Petroleum Industry Act because of the framework that it has kind of codified in terms of the legal framework, the environmental factors, the incentive systems that will drive Nigeria's involvement, Nigerian government's involvement in startup, particularly in technological space.
Some would say that, do we have that enabling environment, infrastructure? We've heard of legal uncertainties that have affected startup industry in the country. Will this eradicate all of these issues?
Well, nothing will. There's no silver bullet that will eradicate all the challenges we have in the economy. But it's a good start, a good point to start. At least for now, we have the regulatory environment, we have the legal environment, we have the incentive systems, we have the process of identifying a company as a startup, as a digital economy operator. And we have incentives for them. We have a mechanism to attract funding for them. So it's a leap from where we were. But it's not going to address all the problems we have in the economy in terms of our weak judicial system, the challenges of legal arbitration in the country, the challenges of insecurity in the country, the challenges of power supply in the country, the quality of education. These are factors we can't wish away. But I think it's a good thing that we have an enabling act that will focus on supporting the digital economy.
Let's talk about implementation now. Many will say we have beautiful laws, we have beautiful initiatives, beautiful acts, but one problem many will say in Nigeria is how well do we implement this? I think a 27-man team was inaugurated yesterday by the minister to go about the implementation of this act. In your thoughts, how seamless do you think the implementation would be? You just agreed that, yes, there is no silver bullet anywhere.
Well, I don't see any bottleneck they will have in terms of implementation, other than the fact that this is now a government that is at the last end of its life. And whatever whatever committee it inaugurates could actually have a effective life of less than 2 months. Because any new government will be at liberty to reconstitute the committee and include people they believe will do a better job for them. Again, if you look at the council, the governing council of the commission or the agency that will be set up, it's headed by the president, followed by the vice president, followed by the Minister of Communication and Digital Economy, and then other ministers, including that cabinet, that executive council, has less than 2 months of life. So in effect, the full implementation of this act will actually begin when the new government is sworn in. So that's the only thing I think as it relates to the inauguration of the council or the committee, the 27-man committee to implement it, because we are at the very tail end of the current government's life. And committee set up will, at best, if I be a member of the committee, I would have just focused on creating the ground rules, setting the structures, so that the new government can actually build on that.
What about regulatory bodies? What will be their role in making all of this work? Because let's talk about like the ease of doing business initiative. We saw all of the moves being made by the vice president at that point and still being run by Dr. Jumoke Oduwole. But some will tell you that some regulatory agencies are still frustrating the efforts of government. What should be their role in all of this?
Well, every regulatory agency of government should be an enabler. Sometimes headships of some regulatory agencies think their job is to act as control, check and balance, while as it should be an enabler. So one of the things I always tell regulators is that you should look at the practice, because practice will always precede regulation. You look at the practice and then understand the practice. The first thing, understand the practice, and then come up with guidance that will support legitimate and legal practices, well as you take measures to frustrate or discourage practices that are outside the law. But if you see your job as that of an enforcer, which is what many regulators see themselves, you end up stifling innovation. You end up killing the industry you are supposed to regulate instead of acting as an enabler. So you should come with the mindset of an enabler, not an enforcer, so that where there is a deviation from the norm, you can easily talk that operator back to line instead of just wearing the big stick at the shortest possible diversion or divergence.
When we talk startups, I'm seeing fintech companies also playing one way or the other in this. They're also in the digital space. I want to put this side by side with the challenge we face at the moment with the cash crunch, and we can't even access most of the digital platforms. Do you think fintech companies or our tech providers for the financial space are doing as much as they can do? Or what more can they do? If you want to move us to the cashless scheme, or you want us to embrace the cashless policy, I think it should be more enabling than what we have at the moment.
Yeah, so we have taken it from two perspectives. In the first place, I've always believed that the bottleneck we've had in payment was induced not because of technological limitations or inability. I mean, prior to the new cashless policy, we were having smooth payment platform. I've been trying to log into my online payment platform for the past this morning, and I've not been able to do that. So I don't think that is based on technological limitations. It has to do with some other factors, probably directives. But having said that, I think Nigeria's fintech space is quite active. Today, we have about 3 or more companies that are valued at more than $1 billion. You have the Flutterwave of this world, which has become a global operator. You have the OPay of this world, which has become a global operator. And you have the Andele. And these companies are all valued at more than $1 billion. And they had investors from other parts of the world taking up equity in them. And we also seen a lot of activity in that fintech space. So I think Nigerian innovators in the fintech space are doing quite well. They are beginning to rub shoulders with the best in the world. And I believe that with this act, they will be far more encouraged. We still have a lot of budding operators in that space that are going to hit the limelight in the shortest possible time. In fact, as we speak today, a lot of venture capital investors are interested in fintech space in Africa are all looking for opportunity to invest in Nigerian startups.
Interesting stuff there. But the ICT sector in generality, what's your take with regards to its contribution to the GDP? Some say it's really encouraging and can be improved. What is your reaction to that?
Well, I think that we've seen the entire ICT sector, which includes the telecommunications space. We've seen that sector grow from an infinitesimal contributor to the economy. So the third quarter contribution was about 13%, over 13%. I remember the third quarter contribution of more than 15%. Of course, the structural economies keep changing every quarter. But with the more than 13% contribution from ICT, which you can actually say only became recognized after the rebasing of the economy, I believe that's one sector that has grown fastest in terms of economic growth sectors in the economy in the past 20 years. They have remained the primus in terms of growth among all the sectors of the economy. And I think the limit of their growth cannot still be fathomed. I believe there's still no limit to their growth. We're now adopting 5G GSM technology. We've seen the telco operators get payment service bank licenses. We've seen expansion in optic fiber in the country. And this will help for faster movement of data, faster transmission of data. Today, you and I are doing a virtual interview because of technology. And you can see the streaming is quite strong. So for me, I think the ICT sector, the digital sector space will actually be the strongest growth sector in the economy in the next couple of years.
And if they are to meet up with that, seed funding is what they always talk about most times. Do we have, you talk about venture capital and all of that, do we have more of all of these guys wanting to put their money into that space? How can we expand when we talk about funding for the entire space?
Well, the first thing is that with the regulation coming into space that will stamp some operators as startup, it kind of provides a kind of pre-qualification or what you may call standardization that will make it easy for capital to go into those startups. Once an operator has been stamped or qualified as a startup, it then means that local investors will begin to see it as a viable investment outlet. And that way we should be able to attract foreign capital into those startups. For the Nigerian capital environment or capital market or investment market, the venture capital business is still at the embryonic stage. We still don't have a lot of patient capital in the country. Of course, we have a few private equity operators. And the guidelines for PENCOM, that is Pension Commission, has made provision to allow pension fund administrators to invest in private equity firms. And those private firms will in turn, somebody will in turn invest in some of these startups. And I think there's also a window for private pension fund administrator, which is the largest fund manager in the country today, to invest in some startups, a limited amount in startups. So we are, as a country, creating windows for capital to go there, but we still don't have a lot of patient capital. Of course, we are an evolving economy. Our economy is still not yet mature. You still don't have a lot of well-established wealth that are now looking for just what we call, that are white knights, what we call white knights, that are looking for impact investment. They are not looking for immediate profit. They're looking for where the investment will have such impactful effect on the society in terms of innovation. But with time, we'll get there.
All right, then. Very interesting conversation. Before I let you go, let me take you away from startup now, and let's do a little bit of projection. We're hearing inflation might decelerate as we expect the figures sometime next week. I don't know. Are you thinking along that line? We've seen some forecasts saying that it's very likely that we see a reduction in expected figures. What do you make of that, Mr. Chukwu?
Yes, absolutely. We should expect a decline in inflation, but this decline, we shouldn't jump up for it. It's not in the positive sense of it. It is a decline induced by cash scarcity, where people are doing fire sale just to feed themselves, or people who are trading in perishable goods have to sell at any price because they don't want those goods to perish in their hand. For instance, if you are selling tomato or vegetables or any of these perishable items, and people don't have cash to pay you, so you're just saying, whatever price you will pay, I will take it, and instead of this getting spoiled in my hand. So the deceleration we're going to see in inflation in the month of February will not necessarily be because on average, prices, there's improvement in supply of goods and services, but rather that people don't have cash to buy goods and services, and those who are selling them are doing fire sale just to make ends meet, so just to feed their families. So we certainly see a decline in inflation rate, but that will reverse once liquidity comes back into the economy.
Interesting stuff. It's a good way to leave it. Group Chief Executive Officer for Cowry Assets Management Limited, Mr. Johnson Chukwu, thank you for your time on the program. I do have a great weekend.
My pleasure.